Hi there and welcome to another episode of CryptoTime. My name is Antonio Shillingford and again I'm here with James Coughlan. How are you doing today?
I'm good. I'm excited to tuck into today because there's been some serious things happening over the last 24 hours, that's for sure.
Yeah, there's definitely been some big topics that have come about. Sometimes, especially when we're doing these episodes, we can effectively just wake up, look at the news and it's sorted straight away. And today was definitely one of those days. So, of course, bear in mind, same situation as always. Please do not take any of this as any form of financial advice. It's just the opinions of myself and of course James.
Yep.
So James, if you'd like to tuck straight into your news.
Yep, let's go for it. So mine's around Fidelity Investments. Fidelity Investments, obviously we've spoken a lot around in the past. We've also spoken a lot around Backed. Now they're kind of the major institutional players that are in this space that are looking to do things kind of down a regulated light, looking to be involved with many of the large institutions and banking utilities that are out there, right? So Fidelity have turned around and actually started out their custodian program at the start of this year, which is fantastic because it means that we now know that there is a safe, secure place that you can store your cryptocurrencies, and that can be done with Fidelity. But Fidelity haven't just stopped there. There's plenty of other things that are coming from them, which was very interesting indeed to hear, which is that they're looking to start trading with actually buying and selling for institutions only. So for example, competitors of them might be people like E-Trade, and people like, for example, Robinhood. They offer kind of similar services down that route, but they're going down a retail and institutional, whereas this is just institutional. Now, one thing which is a very key point here is that they're only really looking to list Bitcoin as their first point of call. Now, I think if we look at this on a two-sided coin kind of pace, it's very interesting because for obvious reasons, Bitcoin would be one of the pairs that they would trade. Just off the back of it, it's the highest market cap at the moment. It's got the largest dominance within the cryptocurrency space, and it's also the highest traded volumes of any cryptocurrency at this moment in time, as a general rule, on a capacity of looking at over time. So we know that there's a kind of real premise for them to do it. But I also think that there's a little bit of information in the background when it comes to why they're only going down Bitcoin route at this moment in time. I think we could potentially see them also go down BCH and SV route, and that's purely because of the algorithm that's sitting behind it, SHA-256, which makes it possible to not really come under the scrutiny as a security because of the way it was birthed, and lots of other different kind of reasons as to why that won't go the way that it's supposed to.
Just to jump in there, at the moment, you pretty much have the two variations of different companies because everyone knows regulation is going to be coming in, whether it takes 1 year, whether it takes 2 years, it's coming. So you have situations like all these different exchanges at the moment where they're trading various different arrays of cryptocurrencies and not really vetting them out as they should do. Because a lot of these ICOs, as we've spoke about many a times, are securities. So of course, if you're an exchange trading those securities, then of course you're breaking the law. So what we have at the moment is you have the companies that are doing things properly, structuring themselves in ways where they will potentially be pre-compliant to regulation once it is released. Of course, they may have to make small adaptations, but nothing major. Then you have the other sort of companies that Michael actually used a perfect analogy for it, which is Sonic. Running along, collecting all the coins, and eventually you're going to hit a wall, all the coins bounce out of you. That is exactly what's happening with the other side of the market. These people know that regulation is going to come in. They know that they have a shelf life, so they're just trying to make as much money as they possibly can in this short period of time. But it will come to an end.
Yeah, I totally agree. And I think it's going to be interesting, certainly to see how that plays out. And I think it's going to be very key to see how, for example, Backed are going to launch, because let's not forget, not that long ago, they were talking about launching with the 58, top cryptocurrencies that are out there, including stable coins and all the rest of it, right? Let's see how, for example, that plays out towards the end of this year, as they're supposed to launch towards the back end of this year. Will they launch with 58 cryptocurrencies now? I personally think they may still be 58, but they may not be the same 58, or they may scale that down. I personally think that really they should be down to, like we said, the SHA-256 side of things. But greed comes into the picture, because look, let's be real to the fact that yes, there are problems, like for example with regulators and stuff with these coins, but that isn't, as we said, going to happen overnight. So there's still potential time for these people to make money. So this is where we come into this whole kind of greed versus like what's right, what's going to be good for the future. And I think it's going to be interesting to see how this all kind of plays out, that's for sure. But I think that really does kind of cover the Fidelity side at the moment. And I think we can really tuck into this whole Binance issue, I suppose, is one word or lack of a better word, that's for sure.
Yeah. So the situation with Binance, of course, this is, I believe, their second hack that they've had now.
That they publicly announced. Now, I've heard a lot of other stories across different forums and things where it's happened before and there's been questionable payouts and things like that. So, yeah, I think that it could be potentially more than just what they've actually announced. But,
So just to drum it up in short, I'm going to go through all the main points, but of course, majority of people can just hit any of the news sites and then you have all the main points there anyway.
Yep.
Really and truly, the meats of what I'm going to be talking about is straight after. So hackers stole more than 7,000 Bitcoin. If you turn that into dollar cents, you're talking about $41 million, which is a huge amount to anyone. Now, Binance made an announcement. A large-scale security breach was discovered earlier on May the 7th, finding that malicious actors were able to access users' API keys and two-factor authentication codes, and potentially a lot of other information as well. So it is still very much in a sensitive stage. Some of the wallets still could be exposed. Some of the users still could be exposed. So what Binance have now come out and said is that they've pretty much quarantined. They are no longer allowing withdrawals and they are no longer allowing deposits. Everything should resume as normal within about a week's time after they've managed to pretty much purge every fraction of what their exchange is to make sure that there are no further security risks. Yep. But the interesting thing about this hack itself is it wasn't just a hack that was done overnight. These people waited and timed it perfectly to make sure that when they did press the button to pull funds out, that it was maximized as much as they possibly could. This is a topic that Craig Wright talks about recently. And I think it was, pretty sure it wasn't the most recent one, the one just behind that, where he talks about security of wallets and effectively being able to completely generate new private keys so that the way a lot of these hacks work is that the people will hack it. They could be there for a year, literally just gathering data and just waiting for the perfect opportunity. If you're constantly pressing that refresh button on them, then those people, of course, at the end of the day, you could still be exposed and you could still get hacked, but they're not going to be in your systems for a year. Or it just greatly reduces that possibility for that to happen.
I think, sorry, just to interrupt you there, I think it's very important also that this serves as fair warning to those that, for example, are storing cryptocurrencies on exchange. Look, guys, we get it. We get it. It's easy, for example, to keep your coins there, trade when you want to trade. Yeah. But I think the main point from this is take your coins off exchange, make sure they're stored on some sort of hardware device would be our kind of recommendation to make sure that you're, taking these situations serious because, this is a honeypot situation. Hackers are going to want to go to that large sum of money that's going to be out there rather than individual wallets. So yeah, just fair warning, guys. Fair warning.
That is exactly why there's such an emphasis and a need for custodian models at the moment. That's why a lot of people are working on them. But just a few of the other details around this. They will be replacing that $41 million. And where the funds are actually going to be coming from is their secure asset fund for users. Now, this is something that they've had for a long time now. They created in the early days. The fund consists of 10% of all trading fees absorbed by, of course, Binance. So it's pretty much their rainy day fund for situations like this. And just as well, they did do it.
So I think it's interesting that that's not an insurance policy because, as we know, insurance policies won't pay out for those kind of attacks.
This is their own pocket.
So they're having to do it out of their pocket. Interesting.
Yep. But what the interesting thing about this whole situation is they're talking about on how to potentially resolve it. And one of the things that CZ said on a live stream was that he's thinking of potentially trying to convince a few people for a rollback. And what a rollback quite simply means is moving down the blocks on the Bitcoin network.
Yeah, so changing the immutable ledger that we were told could not be changed, right?
Exactly.
Yeah, no, not happy with that at all.
The complete immutable ledger that can be altered if he so deems so. Now,
so what is CZ? Is CZ God of Bitcoin now? Is that how this works?
This is another thing. On the live stream, the way he said that it benefits miners, because of course you need miner support. You need 51%, but really and truly in real practice, you're going to need more than 51%. Now, what was stated is that miners will earn more from those 7,000 coins that have been stolen than what they would have in those blocks that they had mined. So he's basically saying that, yeah, you support me, I'm going to pay you and line your pockets.
Yeah, I think that's an interesting point.
I personally have two views on this. It's one, he just thinks that is potentially a good idea because, of course, at the end of the day, he is 41 million better off. Well, Binance is 41 million better off. Or option number two is that he doesn't believe in the Bitcoin network, or he believes that that technology is fundamentally destroyed. And the analogy that we used of Sonic, that is exactly what they're trying to do with that network at the moment. And that has very much been our view for a while now. And that is exactly why we are in support of BSV and only BSV, because it is the real technology of what Bitcoin originally was. It is the core fundamental principles of what this space was really and truly originally birthed for. A immutable ledger that can never be changed. And yes, you can have privacy, but that doesn't mean being a network like Monero or Zcash where everything is completely anonymous. So that's what my angle is on it, and that's what I think is going on as well. But yeah, I guess we're just gonna have to wait and see.
Yeah, I think that is a perfect stamp to finish this episode off on. We have some fantastic things that are coming in the space. We have had a lot of information throughout this kind of journey as to what's been happening with custodianship, what's been happening with hacks and all the rest of it. So yeah, it's going to be, like I said, interesting to see how this whole kind of sector plays out over the coming months. But yeah, as always, guys, thank you so much for watching this episode of Crypto Time. If you like what you're watching, please hit up the notification button on YouTube so you get the latest and greatest from us. You can listen to us through Spotify and iTunes, and obviously you can watch us through YouTube as you are now. So thank you guys so much for watching. Cheers.
Peace and love.